Welcome to Digital Asset News. Take a top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, we've got a fantastic article about taxes, an even bigger article about major institutional investors coming in, and a mediocre article about minor capitulation. So let's just jump right in. But first up, why don't we take a look at what's going on in the market? So Bitcoin is holding steady at 9,700, Ethereum 243, Tether. It's something I'm on a broken record because it's always the same thing just about. We don't really see too much price action, a little bit up and down, but not really anything fantastic. And if we take a look at this middle column here for the 24-hour, it's mostly red. There's a jump for Crypto.com, 6%. Good for them. And that's pretty much about it. So nothing really going on right now, but I expect fireworks to happen. And I'm going to tell you exactly why when we go over these next articles. But first, let's break in to probably the sexiest article I've ever done. So first up, one simple tax election could let crypto traders write off unlimited losses. So first of all, taxes are not sexy. They just are not. But when you pay a ton of them like I do, this article is the sexiest thing you can possibly see. And when I was reading this, at first it was all about traders, and I thought I would talk to all of the people who are out there that like to do trading, that listen to this channel, which I know there's a lot of you. And some of you like to do leverage trading, and fantastic for you. I recommend highly not to do that, but whatever. So I thought we're going to talk about that. But in reality, this is for anybody who invests in a cryptocurrency and how you can do tax write-offs. Now, again, initially, I am not a CPA. This is not tax advice, obviously, but I have to make that disclaimer. So the person that wrote this article, Shehan Chandrasekhara, that's a good name. First of all, who's this guy talking to us about taxes? So Shehan is actually a CPA. Shehan is the head of tax strategy at CoinTracker.io. He is one of the handful of CPAs in the country who is recognized as a real-world operator in a conceptual subject matter. So when we take the time to list who is actually writing these articles, I think it pays huge dividends for us because we don't know who's writing these articles, who's really behind the stories. But when we do these things, it kind of gives it to lend credence to the actual article so you can feel comfortable with the validity of what's going on and what's being written. So with Shehan here, great. I would love to hear what he has to say. So let's jump right in. So first up, if you are a cryptocurrency trader in the eyes of the IRS, you may be able to greatly benefit from a frequently overlooked tax election called the 47.5F election. So first of all, you have to be qualified as a trader. The IRS has published criteria on who qualifies as just that, so why don't we check that out? So this is from the irs.gov website, and you notice right here it says traders in securities. And I took a look at this and also commodities, and it's kind of the same thing. So when you're getting your taxes together, you want to definitely talk with your accountant about which type of criteria in different forms. But to me, it looks like it's the same type of form, securities or commodities, but it may be somewhat different depending on what your tax professional talks about. So we have to make this distinction between what's an investor and what is a trader. I am an investor. Investors typically buy and sell securities or commodities and expect income from dividends, interest, or capital appreciation. They buy and sell these securities and hold them for personal investment. They're not conducting a trade or a business. This is not a business for me. I'm just investing. However, traders, which are some of you out there, special rules apply if you're a trader in securities, in the business of buying and selling securities for your own account. The law considers this to be a business, even though a trader doesn't maintain an inventory and doesn't have customers. That's very big because usually with businesses, you have to have customers, or like in my case, for my business on Amazon, you have to have inventory. But in this situation, you do not have to have either. To be engaged in business as a trader in securities, you must meet all of these following conditions. You must seek to profit. I think we're all pretty much in agreement there. We all seek to profit from daily market movements in the prices of securities and not from dividends, interest, or capital appreciation. Your activity must be substantial and you must carry on the activity with continuity and regularity. What does that mean? In the eyes of the IRS, it is a broad spectrum. So really, if you talk to your tax accountant or your tax professional, They can tell you, what you could do within the boundaries and legally. And that's the big thing. What's within the boundaries? What's in the realm of possibility, really what it comes down to. If the nature of your trading activities doesn't qualify as a business, this is where it gets, pretty savage, because the IRS is like, well, I'm not going to play with you. This is exactly what it is. If the nature of your trading activity doesn't qualify as a business, you're considered an investor and not a trader. It doesn't matter whether you call yourself a trader or a day trader, you're an investor. So pretty much they're laying the law down, as the IRS tends to do, and they say, look, if you don't do a lot of this in a continual basis, and you don't treat it like a business, it's not a business, and you're just an investor. So if yet that fits your criteria, great, you're a trader. How I'm going to show you how it really doesn't matter if you're a trader or investor as far as taking tax deductions here. So moving down. Being a trader enables you to bypass the default limit on capital loss deduction, which is $3,000 maximum a year. So again, if you're a trader, you can bypass this one caveat, which is $3,000 maximum. But for me, I'm an investor. I can have this deduction, but it is a maximum of $3,000 per year. And so when I read that, I'm like, well, that's a bummer, just $3,000. But what's great about this is you can roll it over to the next year and the next year and the next year. And to me, it's a good thing. I'm going to show you why. Anyhow, this is from Cryptocurrency and activate a very powerful tax-saving election called Section 475. It means you can bypass this. What are they talking about? So this next part, what they're talking about, they're talking about a downside. To me, it's not a downside, but it states the main downside of the default tax rule, which is $3,000 per year annually, and that's it, is that in any given year, the maximum net capital loss that can be claimed by an investor is capped at $3,000. However, this is the big thing. Excess losses can be carried forward indefinitely to future years. For example, let's say you had a bad year with $90,000 worth of net losses, which could happen in 5 minutes over at BitMEX. So all else being equal, it would take 30 years, or $90,000 at $3,000 per year, for you to totally write out this loss and under the default tax method. And I got to tell you, to me, that's not bad. Like for me, because I own property, well, let me get into that in a second. But the question I really have is, how many of us out there, you listening to this video right now, how much have you spent over all the years you've invested in cryptocurrency? Or how much have you lost? 10,000, 50,000? Or how much you invested? 100,000? Or how much is it? I don't want you to put that in the comment section. I just want you to, just think about that. Like, how many of us have really spent like $100,000 on cryptocurrency? I mean, I spent a good amount, but it hasn't hit 100K yet. Anyhow, to me, when I hear these types of things, like I invest into properties and land. So to me, it's like depreciation on properties. Like I love that part because, every year I get a depreciation schedule and then I can just roll it over to my taxes and it kind of offsets all my losses or all my gains. So it actually works out pretty well. So to me, it's like depreciation. You just roll it over year after year after year after year. And it's like this little nest egg that you can offset all the revenue that you have and all the payments you have to make to the government. So I like that part. I know it might take a while, but hey, better something than nothing, that's for sure. Anyhow, to activate 475, the good news is that this 475 election allows traders to deduct crypto trading losses without being subject to the $3,000 annual limit. You would then be able to write off the full $90,000 of losses in that year you incurred them without being subject to any cap. Further, once you properly make this election, you can also write off unrealized losses, which is market and market accounting, at year end, leading to additional potential tax savings. And then the last part, and this is where it gets a little tricky, as if it hasn't, but how to make the election. So what you got to do is a properly drafted election statement, as described in Revision Proc 9917, must be sent to the IRS within 75 days from the start of the year to which you want to apply this election. So right here, you're going to have to plan ahead. You have to work with your accountant, but it's going to pay off big time. So if you have that ability, I would highly recommend you do that. But again, talk to your tax professional because they're going to one that's going to help you. Because I have no idea. Like Rev Proc 917, No idea what that is. But you know who does? My accountant does, and that's who I would talk to. So the caveat here is that the way the law is written, it's currently applicable only if you deal with securities and commodities. Remember when I talked about that, this little topic right here, and it talked about securities. So this is securities and commodities. But here's the thing: since cryptocurrencies are taxed as property, and I know that's exactly how they are written in the law in Wyoming. I believe it's also federal. But per IRS Notice 2014-21, the applicability of this election for crypto traders is a gray area, as all things are because this thing is so new. So I think that it's all up to interpretation. And again, work with your tax professional. Bitcoin and some crypto derivatives are treated as commodities by the CFTC. Let me read that again. Bitcoin and some crypto derivatives are treated as commodities because they've already been classified as commodities. So 475F election for those instruments is much clearer than other instruments out there. So if you're investing in like Tomato Coin, who knows what that is, and they might be like, no, you can't use that. But Bitcoin, sure, because it's a commodity, and off you go. And then if something's been classified as a security, the same type of thing. Or if they're talking about like property, again, it's a gray area. So because these things are so new, so we'll see how it works out. Anyhow, that to me, I know taxes aren't sexy, but let me tell you, when you get money back from the government or you don't have to pay so much, super sexy. That's it. Let's move on to the next article. So next up, Bitcoin on-chain metrics indicate post-halving miner capitulation is over. And I'm not going to spend too much time on this one, but what this is talking about, on-chain data suggests that much feared post-halving miner capitulation, which has been blamed for large sell-offs in the past, is now over as miners begin to favor accumulation. The blockchain analytics platform CryptoQuant, that's an awful name, says that its miners position index, or MPI, a metric that offers insight on whether Bitcoin miners are selling or holding on their coins, has plummeted nearly a month after the third Bitcoin halving. So all I'm going to do here, let me just blow this up so we can actually see it. And here's what we got. High miners position index, or high MPI, means miners are selling. If it's a low miners position index, equals miners are holding. So as we can see here, this black line here is the price, and up here is the miners position index, or the MPI. And you can just tell, like back in 2017, they were selling like crazy. And then when the price went up, they still sold, and it pretty much mimicked the sales price of Bitcoin. But then as we kind of came down, you see that they weren't selling as much, and there was a clear dichotomy. There was a difference between what the sell price was and what they were actually selling, and they actually were holding a little bit. Then it got a little bit tighter around here in 2018. Little divergence here. And then here was a pretty big one. February 11th, February 13th, February 17th, and then of course the drop off. And you didn't, that's amazing. You didn't see as much of a drop. You didn't see like an increase in selling as the price went down. That's ice in the veins. And then of course now we see more of a divergence, and there's less selling by the miners in the orange, and the price goes up. So this is just good news. I thought I'd throw it in there because I know people were worried about that. Now you can kind of have your fears a little bit alleviated, and that's great. So let's move on to the next piece. Now this is a good story. So Bitcoin now owned by over quarter of major institutional investors, Fidelity survey states. This is from Alex Dobnia. This guy always writes great stuff. I need to reach out to him and thank him. So here's the contents. According to mutual fund behemoth Fidelity Investments, which boasts an eye-popping 2.6 trillion worth of assets under management, more than 25% of major institutional investors that participated in the survey own Bitcoin. Imagine this. If you've been in since 2017 like I have, and you had heard that a quarter of all major institutional investors were into cryptocurrency, you would have lost your mind. Especially during the parabolic bull run that happened at the end of November, December 2017. It was, if that news would have broke, that would have been, I can't even imagine. Now we have this news coming out right now. What's going to happen in the next 6 months, 9 months, 18 months? It should be fireworks, but we'll see. Anyhow, this is a 36% increase compared to the start of 2020, which shows that big money is steadily flowing into the firstborn crypto. So I got to tell you, I look at this and something's going on because there is just a big boom to these institutional investors. We've got places like Grayscale And this report was on Q1 2020. So at the beginning of April, they put this out, and they had 2.2 billion assets under management. Now, think about this. This is written in like the first week of April 2020. I want to show you something. They went from 2.2 billion, and this is an article on May 11, 2020, where it says that Grayscale now has 3.7 billion in assets under management. So you're almost doubling it. 2.2, 4.4, 3.7, somewhere around there, right? Correct my math in the comment section. I'm sure I'm off, but it's quite a jump. We'll just say that. So if you have something like that, is huge amount of increase from, and the second quarter is not even over. So that's amazing. And then, of course, we talk about Fidelity Digital Assets. They have 2.4 trillion assets under management. Other institutional investors, you have Ameritrade with 1 trillion. You've got VanEck, they're huge gold bugs, a old school financial institution back from the 40s. They just put out in January 2020 how much better Bitcoin is than gold. And imagine this, they are huge gold bugs. And then, of course, the new player on the block, Paul Tudor Jones, where as of May 8th, 2020, he said he's going to put 2% of total investments into Bitcoin futures, and I believe he's probably going to invest into Bitcoin just by himself, but that remains to be seen. So, I mean, these are just huge news that comes about, especially all these institutions. It just makes you think, hey, good things are going to happen. So anyhow, back to the article. Let's break it all down. So the Boston headquartered company, Fidelity, also noted that 11% of all polled institutional investors have already dipped their toes into Ethereum. So you have a quarter into Bitcoin, and then essentially half of that, are also into Ethereum. So again, something's going on with Bitcoin. We know that, but there's also something big underneath that's also going in with Ethereum. I mean, this is just an article that was published 6 hours ago, and it talks about how Ethereum wallets are hitting an all-time high. And this was from Arcane Research, shows that wallets holding 32 ETH or more hits an all-time high. A little caveat there. Why is that important about 32 ETH? Because that's the amount, or the minimum number of Ethereum that you need to start to stake when Ethereum 2.0 comes out. And how much more proof do you have to see how great things are actually coming about? I mean, it looks very promising. Bitcoin, Ethereum, everything after that, hey, who knows? But it looks very positive. So let's finish up this article. So Fidelity's survey included close to 800 institutions, such as pension funds, hedge funds, and family houses. So again, just to go back to Grayscale, the majority of their investments, 88%, came from institutional investors dominated by hedge funds. This was in the first quarter. And it was the same thing, 12 months before, 79% institutional investors dominated by hedge funds. So when we see these types of articles come out, and we see a quarter of all institutional players actually saying, yes, we're into Bitcoin and we're also into Ethereum. First of all, two things. It makes me understand that mass adoption, or we're going to see more adoption, we could say, for cryptocurrency digital assets. And the second thing is all those different places that are saying, don't buy this isn't a good one, we shouldn't get into this. How many of those are actually in the background buying Bitcoin, cryptocurrency digital assets? Let me know what you think in the comment section below. But that is it for today. This is a little bit faster of a video, but these two things that we just talked about, and of course the third thing about the minor capitulation, it's just fireworks, and I think they're great stories, but they're condensed, and that's good stuff. So before we sign off, I just want to say thanks to all the supporters. I really appreciate it. So if you don't know, underneath every video, there's a join button. You don't get anything special as far as private videos or members only videos. I don't hold anything back, but it's kind of like a tip. And so when you click on the button, you can go for level 1, and it's just like a tip. It's a couple bucks. And all my level 1 supporters, thanks for sending in. I really appreciate it. That helps support me and the channel. Then level 2, they pay a little more, so I give them a shout out. And so shout out to All Right Soft, the first to do it. When Mullet, he always helps me hold it down in the premieres. I appreciate him greatly. Myself, who else? Dave Plummer, straight talking guy. Got a YouTube channel, check him out. Grant Sharman. We've got Bruce Wood, Baking Benjamins. They do the Tezos baking, so check them out if you're into Tezos. Noel Flippin' Vegas, Martin Lewin, Michael Ralph, William Howell, Crazy Crypto Canuck, Tessie Ryosaki Positive, Fire Swing Golf. We've got JC Durex Code. They're coders. Crypto Veritas, John Miller, The Office, El Merg, Michael Jeffrey, The Kells Show, Mage Research, and our last two, Terry Prosperi and XRP Carolina. And then, of course, I want to finish off with one last PSA, or public service announcement, and that is that if you get an email from dandigitalassetnew@gmail.com, that is not me. That is just some scammer who somehow has my subscribers' emails. I don't know how he did that. Or she, I don't know who it is. But my email is dandigitalassetnews with an S at the end @gmail. So if you get this from dandigitalassetnew, do two things. First of all, you can email him back, tell him what a piece of trash he is for being a scammer and trying to steal from people. And the second thing is, any email that you get, put that into the spam or junk folder in your email inbox, so that way it'll tell the servers that this guy is a scammer. And that's it. So thanks for sticking with me. I really appreciate it, and I'll see you on the next one.